What is happening, AMC Bulls? We're getting back into an AMC technical analysis video. And today we're going to be going over the micro picture and the macro picture. So make sure to stick around in case you haven't seen our thesis on the macro yet. We have a pretty bullish macro thesis. So let's start on the short term here. We have talked about AMC making higher highs and higher lows here. You started back here in April. You had a pretty amazing recovery, and then you ran all the way from $2.40 to $4, made a higher high or a higher low, and then a lower high technically. So now you're in the battle. You're in the battle to make a higher low here. And this trend line has to hold. We talked about the gap fill at $3. You filled that gap. And so now what you're trying to do is bounce off of this with momentum, with steam, guys. What I like to see for that case, for that bull case to happen, is you need this 4-hour MACD to continue to curl to the upside. I really like that it is literally probably just one ticker away being green from going up and crossing that. And then also on the 4-hour, you have some hidden bullish divergence, which is when the price makes a higher low and the RSI makes a lower low. That shows that the bulls are stepping in here, even though the relative strength index is making lower lows, that the bulls are holding this thing up and they are buying at these levels. Now, this death cross here on the 4-hour is not looking good. Last time you had it, let's just do a little measurement here. Last time you had a death cross, you were up here and you ended up making a 10% pretty much further move. What I think is likely is that you make this very similar like fake out death cross into a golden cross. I think you'll bounce, you'll get the 4-hour flip green, and then you'll test this. And whether or not you're able to break above and hold will determine if you are indeed making a higher high. Because I think if you do that, I don't think you're going to come back down to this triple bottom level like we talked about for the worst case scenario on AMC. Let's zoom out here a little bit. Because we talked about the possibility here of this inverse head and shoulders. And we also talked about this long-term big scale wedge here, starting back from 2023 August. You made a bottom 430, made a higher bottom at 240, and then you might make a triple bottom at 240 or 250 here. So you don't want to see that happen. You do not want to see that happen. You need to see bulls step in here, and I don't like that the volume was beginning to ramp up. If you do not hold this line, you're going to most likely get obliterated 15% more. And beneath that wedge pattern there, you would be looking at potentially another all-time low. So what you absolutely need if you're a bull right now is you need to defend this trend line. You need to defend this trend line. Now, you totally could. You know how market makers are. You totally could break below to that like 279 support, bounce back up, find support, and then go. Totally could do that. That is not without is not within the realm of possibility here. But you don't want to break that support trend, because every single time you've tested this, guys, you've wicked off of it in a monumental way. Here, wicked off of it, 64%. Here, wicked off of it. In 2 days, right? Is that 2 days? Why is my thing tripping? That's not what I wanted. That's what I wanted. Here, you wicked off of it. Within 3 days, 25%. And then here you wicked off of it. It's about 30% move there. So you need to see this thing bounce if AMC is going to have a green momentum swing to the upside, make a higher low, and look extremely bullish going into earnings. If you don't, it's down to that 250, 245 level going into earnings, which I think puts an unnecessary amount of stress on the AMC earnings, because whether or not they come back green, red, my thesis here still remains the same. I just don't want any crazy moves to the downside for earnings, because if you broke this wedge with a high volume on earnings, you would not be in a good spot. You'd probably be looking at about $1.50 to $2 flat. Not great. But this is the good thing. We are closer to a breakout on this wedge than we've pretty much ever been within 3 years. You're closer to the 200-day EMA in forever. And then we're going to continue to zoom out here for you guys. You have gap fills to the upside at $13, $19, and $43. I just don't see you going back down to 240. I just don't see it, because the more you zoom out, I mean, relatively on the weekly, the bulls are still in control when it comes to the volume. You can see strong ramp up in volume, and then you sell off low volume. Strong ramp up in volume in green, low sell off in low volume. And that has been the trend since April, since you've been making these higher highs and higher lows. So if you're going to see a breakdown here, you'd have to see bears step in. And if we go to the monthly, this is where where I get absolutely jacked, because on the monthly here, you have significant volume increase over the last 3 months. And let's pull up our Bollinger Band theory. So the squeeze bands, as they're referred to, John Bollinger created this indicator, and it's intended to show extended periods of consolidation. Typically, when you break above the mid-band of this Bollinger Band here, typically you use that as support, and then you bounce off of it. These bands begin to expand, right? The bands expand, da-da-da-da-da. So AMC is within this coil, within this absolute rubber band tension, stretched to the absolute max. If you zoom out here, the AMC Bollinger Bands on the monthly time frame are the tightest they've ever been. And let me tell you why that's important. Because depending on what time frame you're on, the more you zoom out, the more powerful that indicator becomes, the more prevalent and the more important that indicator becomes. The AMC Bollinger Bands being this tight, the mid band is now even below $4. We've been calling $4 the squeeze zone, because as soon as you get above this midline for the first time since pretty much 2022, you haven't closed above it since 2022. The minute you close a monthly candle above this, and these bands begin to squeeze outwards, you're going to see AMC, whether it's up or down, make a volatile move to the likes of June and January. It's just going to happen, in my opinion, not financial advice. That's the way that this chart is set up, within the wedge, within a double bottom. And the quarterly MACD curling up for the first time since 2021. Now, what we need to see for this to fulfill that prophecy or the squeeze, right? You need to see this follow through and this extension. Because if you go down here, it would not spell good news for AMC. And I truly don't believe in that case. And I think if it does happen, you do you. You do you. but it would be painful to watch retail lose. I want to see retail win here. It's definitely overdue, and the little man is coming. The chickens have come home to roost, as they say. So I think as soon as you see Doge come back to life here, tested the golden cross perfectly and bounced. That's what I'm talking about, baby. That looks really, really good for Dogecoin. Let me turn off these Bollinger Bands. That looks fantastic, man. If you close a hammer candle, risk on assets are coming back. Regardless that Jerome Powell said that they're not probably cutting until September. So you might see some chop or some wishy-washy price action here. That's why I do think you could kind of chop here until you get that rate cut in September, and then things are just going to go parabolic. That's the long-term thesis, long-term scenario. Maybe you chop within this 270 and build a range, but regardless, guys, I think the skies are going to be green for AMC going into next year, going into that September, October, November. Last thing, and then I will jump off my high horse. All right. Let's go to TradingView for this one. Thank you guys for sticking around to watch this in-depth analysis of AMC. I appreciate me and my 59 subscribers so far. We've come a long way. All right. All I care about is the AMC price action here. Let's knock these off. Boom, shakalaka. All right. I mean, you're right there. It is time. You're oversold. Let's see. All right. The monthly time frame. I have not looked at this for quite some time, so I'm genuinely curious to see what we look like. Dang. We had our opportunity. We have to confirm this as an inverse head and shoulders, get above this midline, and then hold. What is it? We need to break and hold this 38 resistance on the RSI. However, what I like to see, let's continue to zoom out, is you are making bullish divergence on the monthly time frame. You may ask me, trap trades, what does that mean? What is bullish divergence? Well, you saw bullish divergence back here in 2020. You made a lower low on the price. Made a lower low. But the price made a higher low. So that is divergence. And that is bullish divergence. The indicator made a higher low, but price was flashing signs of a lower low. And what happened from that low is you went up a couple 1,000%, nothing major, you know. Now, you've now made a higher low on the RSI. So the RSI back here is at 27. That is absolutely capitulation zone. Flashing buy signs. The RSI is now at 36, and you've made a lower low on the price action, but you've made a higher low on the RSI. That's bullish. I don't know who you are, what you do, but that's bullish, guys. Double bottom, inside a wedge, monthly Bollinger Bands, quarterly MACD. There's too many things flashing bullish here on long-term indicators for me to flip on you guys and say that this thing's going to an all-time low. I don't buy it. I think this might be possibly the shakeup before earnings, but only time will tell. And so I appreciate all my 59 subscribers, everyone who has went along. It's been a pleasure, guys. God bless. My name has been Trap Trades, and peace. See you guys in the next one.